Hello my friends, welcome. This is Market Commentary with Axiory. Today, a few hours ago, we had the interest rate decision from Australia. Well, before the decision, the consensus was on hold or maybe small 25 basis points rise. Officials decided to hold, so rate remained unchanged on 3.6%. Along with the decision, we got statement, and the statement says that they decided to put rates on hold because they will still they are yet to assess the influence, the impact of previous decisions on the economy. So they acknowledge that it takes time for those decisions to have impact on the economy, so they will wait a little bit more to see if previous rises will have influence over time on the inflation, housing market, and other aspects of the economy. But they said also that they do not think that it was the last rate rise, the previous one, that maybe we will get them in the future. But for now, on hold, because they will estimate the influence of the previous rates rises on the economy. The reaction is negative. Why the reaction is negative? Well, at some points, some experts were expecting a rise. So we can see a bit of disappointment here. And this is euro dollar, for example. You can see an upswing on euro to Australian dollar. It is a euro dollar, but Australian dollar. We can see an upswing, so euro is gaining. On Australian dollar to Japanese yen. This is the reaction, so we are on the long-term highs, and price went a little bit lower, although now it is trying a reversal. And Australian dollar to American dollar also, you can see this is the reaction. But now the price at the very beginning of the European session, the price is trying to come higher. But yesterday definitely we had a great session for the Australian dollar. Second news, of course, oil. Yesterday it was a huge news. On Sunday, yesterday we had a reaction, and the reaction was a big bullish gap. So now after this cut, many experts are wondering if the price will go to $100 for barrel. Of course, it's eye-catching, and many people are worried that the price will rise to $100, $200, $300, whatever. But this decision about the output shows that the foundations of the oil are currently not great, that OPEC had to make an intervention. It shows that the demand for oil was really low. Why was low? Well, because economies have problems, economies are struggling, there is low demand. So that's, let's say, it's an artificial increase in demand, decrease in output, which shows that oil have problems, right? So, and this cut will not magically create a great foundation for oil to rise further. So I would say that $100 should not really be expected. Let me show you oil. This is WTI, and this is Brent. This bullish gap from Monday. $100, I wouldn't say this is something that we should be worried about in the next few weeks. I think that buyers should be more worried about this gap. Gaps sooner or later are being closed, and I think that this gap will be closed as well. Maybe not this week, but next week, in 1 month, 2 months. So in my opinion, we will still be trading Brent, for example, below $80 for a barrel. It's more probable than oil trading at $100, in my opinion. Okay, thanks very much for watching, and I wish you all the best in your trading.